to our Early Childhood Business Solutions Business Speaker Series. There is a survey placed in the chat that we appreciate all attendees to complete before the end of our time together today. I want to thank each provider, director, and owner for attending our presentation. And I want to extend a personal thank you on behalf of our Early Childhood Business Solutions program to today's speakers, and a personal thank you to our current partners for attending our Business Speaker Series. Early Childhood Business Solutions will continue to stay committed to supporting the continued growth and success of early childhood, including and not limited to business insurance solutions and that's unique to childcare. And without further ado, I would love to introduce our two speakers today from the Mahoney Group, Nathan and Ben Stainer. The Mahoney Group opened its doors in 1915 in Safford, Arizona. Since that time, they have grown from a small family-owned operation to one of the country's largest employee-owned insurance organization. Thank you so much for being here, gentlemen.
Thank you so much, Nora, for that introduction. I appreciate everybody having us out today and everybody from Southwest Human Development who's given us this opportunity to give a little bit of education on commercial childcare, specifically in the state of Arizona right now. We do write nationwide and we work with childcare organizations nationwide, but today we're going to specifically focus mostly on the state of Arizona. I'm going to go ahead and share my screen here. Perfect. Nora, is everything good on that? Can everybody see that? Perfect. Okay, so commercial childcare insurance. This is a great topic to be discussing today. I know that especially in the state of Arizona right now, the organizations that fall under, that title of a commercial childcare organization, you guys are struggling right now with the insurance, and it is an extreme challenge, whether you've had claims or you haven't, whether you have, had struggled with your annual reports, and there you have deficiencies or you don't on those annual reports. There is problems right now in obtaining the proper insurance, whether you're contracted through DES and have to abide by those requirements or you're not. It is still challenging to get insurance to properly cover your organizations. And I personally today am going to talk about that. And then Ben, our other speaker from the Mahoney Group, will be discussing more on the side of marketability and how you guys as commercial childcare organizations can essentially make yourself look the most appetizing to these insurance carriers and get the best premiums and obtain the proper coverage that you need and make those things that have been challenging lately a more simple and smooth process for you. First things first, Ben and I are both members of what we call here at the Mahoney Group, the Human Services Practice Group. So here at Mahoney Group, we have our organization split up into practice groups. We have a construction practice group, a hospitality and hotels practice group, a workers' compensation and contractors practice group. So we're split up into all different avenues and types of business because they really like us to specialize in the type of organizations that we work with. And Ben and I spend 100% of our time working with nonprofit organizations and human services providers across the country, striving to help them obtain the best insurance that they could need to properly cover their organizations. And not only that, but to help them build a comprehensive insurance plan along with some risk control and loss management and risk control policies and procedures. Mahoney Group currently, right now, we work with 150 service organizations throughout the state of Arizona. We're members of multiple different human services and nonprofit associations that we work directly hand in hand with, and Ben's going to talk a little bit about that. And then we're members of the Assurance Global nonprofit group, which Assurance Global is a large conglomerate of insurance agencies that throughout the world that work together to strive to just better how we provide insurance throughout the entire planet. And we specifically are part of the nonprofit group that specializes in nonprofits, educates us on nonprofits and how we can best help them. But we can go ahead to the next one. So here's just a quick short breakdown of the organizations that we work with and what types of organizations we specialize in. Different human services providers, foster care, group homes, food banks, commercial child care, family and child services organizations, and IDD and developmental disabilities organizations. So this is where we're going to get into the weeds on some things and do a little bit of education on what is going on in the insurance marketplace. The state of the market right now is in basically a really hard and challenging state. All the way across the board, almost the only line of coverage that has sort of softened a little bit and gotten a little easier to write in the last year or so is workers' compensation. But other than that, all the way from commercial property to sexual abuse and molestation coverage, insurance premiums are rising. It's getting harder and harder to obtain the insurance that would have been easier, 10, 15, 20 years ago. And currently in the insurance market cycle, which we're going to talk a little bit about, we're in a hard market. But these questions I have listed on here, over the past about month and a half, I have had about 8 different locations and childcare organizations, some of them with common ownership with, so I worked with about 4 different owners on 8 different locations. And these are the questions that 100% of those organizations asked me, had questions about, and were confused on. Why am I being non-renewed by my current carrier? Why are my premiums increasing year over year, no matter what, whether I have claims or don't have claims? And why has it been so challenging to obtain insurance for my organization? It's extremely frustrating. And that's why we're here today. We want to give you some tools and help you understand what's going on and why these things are happening. Some of those organizations that I've worked with are here today and attending the meeting. So I'm excited for them to be able to learn a little bit more as well, more than what we've already discussed with them. So a little bit, we're going to discuss a little bit, and this is basic insurance jargon basically that we talk about, but there's 2 different types of insurance markets where we're at in the cycle. There's, the commercial lines insurance market is one thing, but we're either in a soft market or a hard market, and that cycle fluctuates over different amounts of time. It can go from a soft market for 3 years to a hard market for 5, and then back to a soft market for 10, and then a hard market for 8. And it just depends on where we're at in history and the history of insurance and what the economy looks like, and inflation and things of that nature all play into insurance premiums and where we're at in a market cycle. But currently right now we are in a hard market, but a soft market is often referred to as a buyer's market. And it essentially, to break it down simply, is when insurance carriers are cutting price and offering different types of services and things that help them to compete for the business of organizations such as yourselves. That is a soft market. Essentially, the carriers are competing to write insurance for these organizations. A hard market is the exact opposite of that. It is where you, as the childcare organizations, are having to better your policies and procedures and having to do more to even be able to obtain the insurance that you need, because you are competing for the capacity of liability limits and of how much premium a insurance carrier can write for a specific type of business that they would write on a day-to-day basis. And so, each carrier has its own capacity for different types of business, like construction or hotels, or in this case, childcare. And right now we are in an extremely hard market where not only do we have a ton of insurance providers backing out of the marketplace and saying, hey, we're no longer providing insurance for childcare. They are, even the ones that are still writing it, have limited what we call their capacity. They're only allowing, $2.5–3 million of premium for childcare organizations to be written over the course of 12 months. And so that essentially right now is where we're at. We have had right now in the current hard market, I believe, and this is from the Insurance Journal of Arizona. They do a bunch of surveys and things over specific periods of time. It's the Insurance Brokers Journal of Arizona, excuse me. And we are at 25 quarters in a row that insurance premiums have increased. Instead, they haven't stayed even and they haven't gone down. Overall total over all lines of coverage, 25 quarters in a row where those premiums have increased. So extremely hard market and a challenging thing for childcare organizations specifically. We're going to talk a little bit about why we are in a hard market, and we're going to discuss a few things that are going on in the United States right now that are definitely not helping with these insurance premiums and why it's so hard for organizations such as yourselves to be able to obtain and keep your insurance. So the first one we're going to talk about is the one on the screen, new state legislation that's being passed. There are laws being passed across the United States right now, specifically by state governments most of the time. There hasn't been a ton of federal legislation on this, but right now there is specific legislation in state governments being passed that is hurting any type of human services provider that might have some sort of sexual abuse and molestation exposures. Childcare is a very large one, as we know, and as you all know. But the one I specifically wanted to discuss today, that's the largest example, is there was a bill called the Reviver Bill that was proposed to the state of California and was passed. And this was proposed about 2 years ago, and it has now been passed, but it's referred to as the Sexual Abuse Cover-Up Accountability Act. And so this act that was passed is opening up a 3-year window where any alleged occurrence of sexual abuse occurring on January 1st of 2009 or after, there's a 3-year window that's been opened up where these claimants can go and have civil lawsuits and file claims with the insurance of different organizations where these alleged occurrences happened, when typically in the state of California, the statute of limitations is 10 years. And when it comes to this happening, it's not necessarily a bad thing that this is happening, but how that it's affecting you guys as childcare organizations is that because they can go back so far on these lawsuits and these claims that they can file on your insurance, they have found it very challenging for organizations to be able to provide proof to essentially say, hey, this didn't occur, or we put everything in place so that it wouldn't occur, because most of those employees are not around. They're not legally required in the state of California to keep documentation of things like that happening over 10 years. So if they can go back before, these organizations are going, hey, I have no ammunition, even if I did everything right, even if I, dotted all my I's and crossed all my T's, I still will potentially lose this lawsuit because I don't know where that employee is. They could be passed away. They could have moved to another country. They could be somewhere across the United States. I don't know how to track them down. We don't have the proper documentation still on file because we're not legally required to keep it. And so when an insurance company sees things like this, huge red flags go off for them, going, okay, anything with a high sexual abuse exposure, we are no longer going to be able to offer coverage on that, because I don't want to have to pay a claim 20 years after it happened, and this insured's no longer paying premium for me to cover this. And so that has been a huge issue with things like this happening all over the United States. The next thing we're going to talk about is litigation financing. This is probably the one that I hate the most personally, because it doesn't make sense to me, and it's a little sleazy, but this is simply the world that we live in now, and things like this are occurring. So litigation financing, if you don't know what it is let's say that it essentially is just a third party investing in a lawsuit. And when they invest in this lawsuit, they in turn have a contract agreement where they receive a percentage of what the settlement is on this lawsuit. So, and everybody here knows we all have and all work with people who are less fortunate than others, and they're barely making it by. And if something was to happen to your kid at the daycare center, and a large law firm approaches you and goes, "Hey, I know you don't have the money to pay a lawyer. We know that this organization's insurance limits is up to $1 million. We think we can get $1 million out of their insurance company. We will provide the defense. We'll pay the defense costs. We'll scratch all that out. You sign this document. We pay you a certain amount of money up front. And then whenever the settlement comes in, we will get 60% of the $1 million. You'll get the other 40%, or whatever the state they're in legally requires. And then they basically have made a profit off of a lawsuit that they had nothing to do with, because they could. And because of this, so much more claims that are happening are becoming extremely inflated price-wise and premium-wise. And it essentially makes it so claims all around are getting bigger and bigger. Insurance companies are becoming less and less profitable, and because of that, they're having to pick types of business that they're having to pull out of. And childcare for the sexual abuse and risk exposure and student accident exposure is a very large risk in the eyes of these insurance companies. And I'm going to talk a little bit about a specific claim example in a couple of minutes here when I'm talking about a specific carrier. But they are pretty much going through it right now with claims specifically because of this litigation financing and these third parties that are investing in these lawsuits. So the next thing we're going to talk about is recent carrier changes. I'm going to talk about 3 specific carriers, just so you guys are educated a little bit about what's going on in the marketplace. And 2 of them are titans in the insurance world, and especially in the human services provider insurance world. They both have large books of human services organizations and write a ton of premium in the space and are very well versed. And we're going to talk a little bit about their experience and basically why they've now pulled out of childcare and are no longer writing childcare. And another one is an instance that happened in state with a organization that used to carry used to provide childcare insurance, but is now they have maxed out their capacity on childcare. And so because of that, they are no longer accepting any new business submissions on childcare. So the first one we're going to discuss is Great American Insurance Company. So Great American has been around for an extremely long time, and childcare is actually in their top 5 classes of business. They have 200 accepted classes of business that they write, that they are willing to provide commercial insurance lines for. And childcare is their 5th largest book of business that they have. And because of the claims that they've seen in the last 8 years, they have been upside down on their childcare book, which means basically they're after claims and having to pay their staff. They are not making a profit on childcare. So they have called for a cease of new business being written for childcare and are no longer accepting it. They have stated that it may change here as the market softens a little bit in the next couple of years, or whenever that happens, and they could get back into it. But as of right now, they have paused that. Speaking with some of our Great American reps, we write quite a lot of business with Great American, especially their human services practice and their human services department. They have, in the last year, had their first time in the history of Great American have had to, on a claim that they had for a commercial childcare organization, they reached the max limits on the policy, which was $16 million. So they paid out a $16 million claim, which was the maximum on all lines of coverage and the umbrella policy they had to pay out towards this liability claim that they had. And they wouldn't give me the details on it, but they basically said that's the first time that's ever happened to us. We've never had to pay out a max claim, and it was $16 million. And it was involved a child's finger being cut off of something of that nature, and they couldn't reattach it to the finger in time. And so it was, loss of wages and, different things like that will happen later in that child's life because that finger's gone. They're paying for all of it. So, but Great American is a great example of someone who has been writing childcare forever, but just because of the current state of the market, they've decided to back out, which has been hurting a lot of you and a lot of people all over the country. The next one is Philadelphia Insurance Companies. This one is a lot more prominent in the United States, just because they're like a titan in the insurance, commercial lines insurance industry. It's a great carrier, and they write all types and different avenues of business, but a lot more agents have access to them. So I'm sure some of you here in the last 5 years who have had in their insurance in place for that amount of time were with Philadelphia at one time. Most people are, because they do such a good job. They've been insuring specifically childcare organizations for over 30 years nationwide. And on the slide, that basically is what they had to say. I will say I put as much information on the slides as I could, because we're going to ask them to just send out the entire PowerPoint for us to everybody that attends today. And I want you guys to have this information to refer back to, because I've had to use some basically proprietary agent resources to find this information. So I want you guys to have this in your back pocket and be able to refer back to it. So I'm just, like I said before, I'm just going to be skimming through a lot of these slides and not really reading them word for word. But because of it essentially comes down to wage costs right now for childcare organizations, and the pool of people to hire from has gotten infinitely smaller in childcare. They, in their experience, have seen that whenever organizations like commercial childcare organizations and other healthcare and human services providers are stretched thin when it comes to employees, and they're trying to do more with less, the first thing that goes out the window is risk management and loss control. Those are the two things that they always see go out the window, and they see a lot more major claims, a extremely inflated number of violations on annual reports. And they see that those things, and they've noticed that those things are usually corrected right away when the report comes out, and they'll might be corrected for 2 or 3 months, but whenever it's stretched thin again, those things tend to go out the window again, and they don't really get fixed long term. And because of this, they also, in the last 5 years, have not been profitable on childcare. So same thing, they've said, hey, it could change in the future. We're not 100% out of childcare, but as of right now, we are no longer writing childcare. And in a lot of cases, they are non-renewing childcare. Great American, who we just spoke about prior, they're not non-renewing their childcare book for the most part. If there is some things always come up, and sometimes childcare organizations do get non-renewed, but they are keeping most of their childcare book. They just aren't accepting any new business because they're trying to figure out how they can make it profitable. Philadelphia has actually started to non-renew quite a bit of childcare organizations. They're keeping some that are larger and they know and have a good relationship with. But when it comes to mid-size to smaller, a lot of them are getting non-renewed depending on annual reports and claims history. And then the last one that I'm going to discuss is the full name is the Social Service Contractors Indemnity Pool, but we always refer to them as SCIP. So SCIP it's a risk pool. So I have a little, cute little chart on the side there that explains what a risk pool is. But essentially, instead of paying an insurance carrier your premiums, what happens in a risk pool is a large group of the same and similar organizations get together, they put all their premiums into a pool, and then that pool pays out the claims, which is different than how your standard insurance carrier would typically operate on those things. But SCIP was created in 1987, and this risk pool specifically was created because human services providers in the state of Arizona, SCIP only writes in the state of Arizona, but human services providers in the state of Arizona were having a major issue getting the necessary limits that were required by their state contracts, whether that's through DES, DHS, DCS, the DDD, Access, Medicare, Medicaid, Mercy Care, all the different state departments that they have. Every time you become a contractor for the state, they have insurance requirements that you have to abide by. And these organizations were like, this is impossible. Nobody will get this for us. So this pool was created, and this carrier was created so that they could provide that insurance and offer those limits that they needed to comply with the contract. And they've been around since 1987. We, at the Mahoney Group, actually write the most business with SCIP in the state of Arizona. And we work with them quite often and have a ton of business with them. They do a phenomenal job because, when it comes to the state contracts, it can be very challenging for carriers to really understand what the state wants and needs if they're not in the state and understanding what's going on. But Skip has what we call reached capacity for childcare. This happened probably a month and a half ago. I actually reached out to them to see if I could market a childcare account to them, and they said, "Hey, we are keeping the accounts that we have, but as of right now, we're at about $2 million in premium. We will no longer be we'll no longer be quoting any new business on this class of business." Unless, we might be able to make some exceptions depending on how large and what the claims history looks like. But they basically have to be squeaky clean and perfect with great annual reports, and they'd have to check every box for us to write it. And so this is another instance where they are not comfortable writing childcare anymore. And so they've put a pause on it. They actually have kind of a different perspective that was very interesting. And I understand where they're trying to be leery on it and why. And it's because the DES contract through the state of Arizona for childcare requires that all liability limits, including the sexual abuse and molestation limits, be under a occurrence basis when it comes to claims. So basically you have what's called a claims made policy, and you have a occurrence basis. Occurrences, hey, we have at any time in the next 10 years, whatever the statute of limitations is in the state of Arizona, to press charges and file a claim, they can then, because it's on an occurrence basis, as long as that claim or that occurrence happened within the policy period where they insured that organization, then they are responsible to provide insurance and pay for defense costs and offer those limits that they insured them for, no matter how far in the future that claim happens. And so that is the main reason why they have backed out of it, is because, like we talked about earlier with some of the state legislation that's being passed, they are they're saying, hey, times are changing. People are filing lawsuits 25 years after. We don't want to be responsible for that. We're no longer comfortable with this class of business. And so this is where we're at right now with the childcare insurance industry. I wanted to go over these things just so you guys are educated a little bit on those questions that I had up at the beginning, and why you're going through what you're going through, what's going on in the world with specifically childcare insurance and insurance in general. And Ben, I'm going to turn the time over to Ben here, and Ben is going to really get into the weeds on what you guys can do to help yourselves and how you can leverage your agent and multiple different resources that you might not know you have. And I'll go ahead and turn the time over to Ben. And Ben, let me know when I need to click through these the slides, and when you're ready for the next slide, I'm controlling that for you. So
okay, sound good, everybody? Can you hear me? Go ahead and go on to the next one, Nate. Okay, so I'm going to talk a little bit about marketability, but before I do, I thought I would smile a little bit, because we just got rid of all the difficult stuff, all the stuff that's depressing. There are some ways that we can help you guys work through the mess that's here and help you look better to the carrier, and that's what I want to talk about. I want to talk about the marketability side. Most of you probably don't realize this, but on any given day, a carrier will have, an underwriter will have somewhere between 10 and 15 submissions that come into them and are put on their desk that say, hey, we want insurance. They can put together somewhere between 6 and 10 quotes a day. That's about as much as they can do if they're really, really hustling. And so what happens is 5, 6 of those get pushed right out the window, right out the door. There's no possible way for them to provide quotes for all these. And so they have a process they quickly go through to look at these, at each one of these risks and say, yes or no, I'm out. I don't want anything to do with this one. So marketability to me is putting you in a position where they're holding on to that submission, that quote that you're trying to get. They're holding on to it and saying, this is what I want to quote. And there's a lot of things that can be done as we move through this process. But I do want you to understand that right now, being in a hard market the way we are, what we're trying to do in this process is we're trying to eliminate a 50% increase and get you down to a 12 or a 15% increase. The things that we're going to go talk about today are a few things you can do. There are 1,000 things that can be done. And I want you to understand that we're not, this isn't an end all be all, but these things will make a big difference on that submission and getting you looked at through the process. And your agent should be helping you with that as you work through that. So this first, this screen right here, those questions, I've broken them down real basic, but they are, what are they looking for as an underwriter? And then what can you do to appear and be better to them? And then where do I go for help? So those are the things that I'm going to touch on here. And I'm pretty straightforward and to the point. I'll just let you know that Nate and I particularly, I really do love insurance. I'm kind of passionate about it. So I'll be a little, I don't know, a little forceful on it, but hopefully you don't mind too much. And hopefully the stuff that we share with you helps. That next page, Nate, flip to the next one. All right. Supplemental applications. This is that application that you get sent over from your insurance agent. And it is 7 pages long, and it's a mess. You look at it all the time and go, I really don't have an hour to fill this thing out. It's going to take me an hour to get through this process. Well, I'm going to say, take the time, but hopefully I'll give you an idea of how to fill that out as you work through and fill it out in a way that will make a huge difference in what the underwriter sees and what they think about you as an organization. They ask questions on there all the time, like, is the playground supervised? You're looking at it going, really? You think I got a bunch of kids playing out back that are unsupervised? Is that the questions appear to be stupid questions in many cases, and I understand that, but they're not if you really delve into what the reasoning behind the question is. So I want to do that today. I want to go through this. If you look at the slide here, it says always ask yourself these 4 questions about every single question that's being asked. Why are they asking the question? What is the state's requirement on the question? Do I meet or exceed the state's requirement? And then how do I prove it? So I want to take those items off to the right. These are things that come up all the time. They are, how often is your organization having a fire drill? So let's talk about that question. Let's ask the question, why do they ask a question like that? Do you really think that they care about whether or not you're running fire drills? They don't. They don't care whether or not you're running a fire drill. They only ask the question because they're concerned that when a fire happens, will everyone in the organization know exactly what to do? Will the right people get the right kids out and in the right place whenever this fire occurs? That's why they're asking the question. It is nothing to do with whether or not you're running a fire drill. So if I'm answering this question, I'm going to ask these additional questions, and then I'm going to, question 4, I'm going to prove that I am doing the fire drills, even though we look at the second question and it says, what is the state's requirement? Well, okay, the state requires we do this quarterly, right? So we go out and we have a fire drill every quarter. That's what the state requirement is. I ask the question, do I meet or exceed that requirement? You have to meet it. We know that because you're keeping a log on that. You have to write down when we're doing fire drills. That's something that has to be there. We have to have hanging in the location a document that says this is your fire escape, or this is your emergency evacuation. This is where everybody goes. So if I'm answering this question as an agent, here's what I would do. I would say, okay, I know why they're asking the question. Yes, the answer would be yes. The state requirement is quarterly. We do these quarterly. The last 4 times that we did this were this date, this date, this date, and this date. Here's an attached document of my emergency escape plan that's hanging on the wall in the office, and it's hanging in the back room. That's how I'd answer the question. I would put this information together, and what will happen is when you get that document attached and you get an explanation that says, not only are we doing it, but we're doing it correctly and we're doing it right and we're keeping track of it. There's a record of it. The carrier goes, everyone else just marks yes. Yeah, we do that. Yeah, we do a fire drill. Sure. That's what every single person in the industry is doing. That's what every agent is doing out there. They're shooting you over a application saying, hey, fill this out. And then they're firing it back over to the carrier for the information you put on there. What you don't know is that companies like Great American, they write in 50 states. They do not know every single regulation, every requirement for every state. You guys know that. And the reason why I asked question 2 and 3 is because you want to put in there, hey, this is a requirement of the state, which tells the underwriter somebody is coming in and doing an inspection on it. Somebody is checking to make sure these things are being done. And it tells them that. And then, do I meet or exceed? That may not be applicable here. Do I exceed? But it will be in the next couple questions that come up. So if we ask and answer the questions on the application that way, you're going to make a difference. You should be, when they ask a question about, do I run MVRs? They don't care if you're running MVRs. What they want to know is, hey, is the drivers that you're putting in these vehicles to drive kids around, are they safe? And so you're going to say, yes, of course we run MVRs. We run MVRs twice a year instead of once a year. Our agency runs them at renewal and we run them at 6 months. We're making sure I exceed that MVR limit. And then here's a copy of the requirements that our drivers have to meet in this process. If you attach those things to the submission, one more thing, the underwriter goes, wait a minute, this person is on top of it. They know what's going on and they're organized enough that I think this might be one that I can look at. I put the next question in there. How do employees warm bottles? I spoke with 4 underwriters in preparing for this, putting this thing together for you guys. Those 4 underwriters, each of them mentioned bottle warmers. The claims that have come from bottle warmers being pulled over on kids and major burns are astronomical. They're huge. So if you're warming bottles in a crock pot, they're out. Nope, sorry, we're not doing that. We don't do that anymore. If you're warming them in a microwave, sorry, we don't want this risk. So they want to know that you are going through that process and doing things correctly. And not only are they correct, but maybe over the top. They want to know that the bottle warmer you are using, if you can bolt it down, bolt it down. Take a picture of it. Say, hey, this is in the kitchen. The kids don't have access to the kitchen. Here's a picture of where it sits. It's away. The cords aren't hanging over the edge. Anything you can do to show, hey, bottle warmers is something we're aware of. We know what's going on. And then the last question on this thing is one that's an interesting one. And I'm not aware, I don't do a whole lot of stuff on the childcare side. I do a lot more in developmentally disabled group homes. I do a lot in home health stuff. That's really my focus. But the risk management stuff is really, really similar. So this question, do I have an active shooter policy and procedure in place? This question comes up, and a lot of times, yeah, well, I don't have that. I don't have one of those. That's a fairly new thing that's been out in the last year and a half. I haven't put that in place. I don't have that. No, I don't have that. That is not the answer to the question. If you don't have an active shooter policy and procedures in place, the answer to the question is yes. And then you get one. Tomorrow, you call your agent up and say, I need an active shooter policy and procedure. I need that. And your agent should be able to provide that for you. He should be able to give you exactly how to go about doing it. And most of the time, it's free. The agent has that stuff. They have access to that stuff. At least the agents that are working in the space do. They have access to an active shooter policy. You're never going to put something on there that isn't true. But the answer to the question is, yes, I'm going to have one tomorrow. And what they want to know is, when this policy renews, do you have that policy in place? Is it there, and are you using it? You're going to implement it in your next safety program. You may put that in so that people know what's going on. you need to have that. You need to have something in place that says, hey, I've got a shooter on the premises or somebody I think might be. What are the protocol? And it needs to run smooth. That's a benefit. Nobody is going to attach that policy to their proposal except you. And if you do, and you say, yep, everyone's going to mark the box. Yeah, I've got that. If yours is attached, the underwriter gets to say, one more reason. Okay, this is what I want. I want to go this way. If you'll go through that supplemental and do that correctly, I recommend that you go through and do that supplemental application with your agent, at least the first time. If your agent doesn't have time to do that, get another agent. Move on. That's what you need to do. You need to have somebody there that's helping you manage this process. Okay, Nate, go on to the next one. Okay, I'm not going to spend a ton of time on this. I'll spend a little bit, but your state inspections, I want you to understand that here's exactly what happens. The carrier, the underwriter picks up that submission that your agent has presented. They pick it up and they go straight to the loss runs right now. And they go, these guys have a bunch of claims. If they have a bunch of claims, you're going to excess lines. You can expect that large increase. That's what's going to happen. Now I'm going to talk about in a minute about some plans and developing a plan moving forward to get you out of that space. But if you don't develop a plan moving forward, then you'll be there next year and the year after and the year after that. You'll be there for 4 or 5 years if you're not actually working on that, getting those claims off of your claims history. They're going to go from the claims right to your state inspection surveys. They're going to look them up online and they're going to go through them every single time. So if you have right now, because so many people are coming out of the market and there's so little work in there right now, if you have claims that involve abuse, sexual abuse, physical abuse, if you have claims that involve property, auto, you're going to have a hard time getting anybody to write that in the standard lines. Not that we can't find a way to write it. We can. It's just going to take a little more work, and the more information we provide, the better shot or opportunity chance we have on the putting together a premium that's going to actually be manageable. What they're looking for in those surveys is deficiencies. Now, each one of the underwriters I spoke to said, hey, look, we understand that many of those deficiencies are the auditor making sure that everyone knows that their job is valuable. We know that. They know that. They know, I think I saw a couple of the deficiencies. A roll of duct tape was left on the changing table. There's only one blanket in the car, in the vehicle, and there's supposed to be 2. We understand, they understand that as they go through it. They're not looking for a blank slate, but they are looking for, is that blanket been replaced, or is it on 3 inspection reports? And if it is, they're going, hey, these guys aren't doing, they're stepping back a little bit. If you have 3 or 4 items that are on there 3 or 4 times, they're going, hey, these guys aren't even reading the inspection reports. I think we're out on this one. And that's literally what they're doing. Again, if you have those real investigations, those are out. Your real investigations into large claims is going to be an issue. Again, we can get it done. It's just going to be expensive for a little while. Now, I wanted to note this thing here on the bottom. It says, it's always better to discuss these items up front with the underwriter. Hoping that the underwriter and your agent do not discover these items is not a strategy. If I were you, I would pull my state inspection survey, at least the last one, and go through it and provide it with the submission and say, hey, look, we're going through this. Here are the corrections. Here are the things that we've done. We fixed these items. They're all taken care of. That is what the underwriter wants to see. They want to see where the corrections are being made and that they are being made. Okay, Nate, next one. I'll hit these real quick. The first thing I want to note is the very last highlighted item. Your insurance provider with direction from your agent can be a huge asset. And I'll follow it up with your insurance provider with no direction from your agent can be a giant problem. what you need to do is you need to be working with your agent in putting things in place through your current provider that help you look better to the provider and help your employees be safer, your kids be safer. So for example, there are free, some carriers offer free GPS systems that are plug and play. You can plug them in to the vehicles that you own, and they take care of where your employees are going, hard braking, how they're driving, if they're speeding, and that information is your information. It does not go back to the carrier. What the carrier finds is, hey, when we do this, the drivers pay more attention to driving because they know they're being watched. And so it helps. It makes a big difference. There are every provider out there ought to have this. They have a choking. One of them has a choking device that goes over the baby's mouth, and you push on it and pull it, and it is 100% successful. And I say that 100% of the time, it clears the airway 100% of the time, and they give it to you free. All you have to do is just order it. They have a liquid detection system. It detects leaks in your locations. You put it into the house on the pipes, and it tells you, hey, you've got a leak somewhere in the house. You got to get it fixed. I mean, there are all kinds of things like that that are available to you that are free. They don't cost you anything, but you have to know that they're there, and you have to communicate with your agent so he can help you work that way. Work towards getting those things for your agent, for your the business. And then there are all kinds of things that all the carriers offer, from driver's training to sex abuse and molestation training, to lifting, to how to lift and properly carry kids. I mean, there's all kinds of trainings. I as an agency here, I have an access to something called XyWave, which all our clients have access to. It has thousands and thousands of videos that are plug and play. You can put them in and train your employees, and there's no issue with it. It's pretty easy to do. So make sure that you are utilizing the tools that the carrier provides for you. Again, with direction from your agent. Okay, Nate, go to the next one. Okay, and then I want to. This one's an interesting one. I'm not. Look, we'd love you to call us and use us. I understand that. I'm going to give you some things here that you should be looking for in an agent. First of all, I'm going to recommend that each one of you interviews your agent, that you get on the phone and you ask questions. You sit down and in searching for an agent. If you're not being provided this help, you should be out getting on a Zoom call for 5 minutes with 5 different agents and asking them a few questions. You'll be able to determine right away if they work in the space, if this is their specialty. You'll be able to see that in just a matter of minutes when they don't know the language, they don't know your lingo, they can't speak your speak. I mean, if they don't know that stuff, then you know that isn't what they do. And there are a few guys out there right now that, that write a lot of childcare, but they're not specialists in the field. They have a program, or they have some carrier that no one knows about, that they write through that carrier. And those things have been going away. And as they do, these agencies are in a panic. They don't know what to do. They don't know how to act, and they don't know where to go. And so they're struggling. You need to find somebody that is working in the space and helping you grow and learn and become a little better in view, not only in view, but in view and on the risk management side. Okay, so I asked that question: is my agent a specialist in the industry? Is that first one? And here's why that is important. It isn't just important for the risk management that they're going to help you with. It's also important because in the industry I work in the behavioral health, but in behavioral health and DDD, here's what happens. I get to know a carrier, and I get to know them extremely well. They know me. When a submission comes across the room and there's 13 of them and one of them is for me, they pull mine out first. And they pull mine out first because they know I know what's going on. I've got a relationship, 10-year relationship with the underwriter over at Skip, and she knows that everything is going to be in that file that they need. Now, not only that, but here's one that I got on the phone 4 weeks ago, about a month ago, with the carrier. It was the premium. There's no claims on this account, and the premium is $62,000. Now, that's a decent sized premium for this caregiver. And the problem is that his renewal where he's at is at $48,000. And so, and I explained that to the carrier originally, and they came back with a $62,000 quote. So I got on the phone with the carrier and I said, what are you doing? Everything's in place. Everything's right. I need you to get on board with this. So while we were on the phone, she got on the board in the system. She pulled out the information and looked at it, went through it and goes, Ben, we've quoted this over the last 2 years. We actually really want this account. What do we have to do? And I said, look, if you can get to the $50,000 mark, I think the insured is going to move and go with you. You have what we need here. And so she 7 minutes later, got to the $50,000 mark. A lot of times what you don't understand is the carrier has the ability to go from, if we have a $100,000 premium, they have the ability to debit or credit the account $35,000, or they have the ability to debit the account $35,000. Your swing there is $70,000, $65,000, all the way up to $130,000. That's the swing. And so that relationship that I have is paramount. It means all the difference in the world. And so that's why you want to have somebody that's in the industry. So, and then we talked about the role that these guys have. I don't want to take all your time up, but the role that your agent is playing in what you do should also have something to do with claims. You should have a robust claims management team that works on that stuff. You should absolutely have somebody handling those claims. If the last time you went through a claim, you did it on your own, find another agency. Just find somewhere else. There are lots of options and opportunities for you out there to find somebody that will help you through that process. You should not be dealing with a claim on your own in any way, shape, or form. That you should file the claim, and then you should get contact. You should hear back, and that stuff should be pushed off your loss history as fast as it can, because the agency that you're paying is working for you that way. So, and most of the stuff that we talked about here is cost effective. Is at no charge for a lot of your agencies out there. Sometimes there is additional fees, and some of that will have to do with the size of the agency and how much funding you're bringing into the insurance company that you're working with. Obviously, if the fee to the agency is $600, they're not going to, and that's what they're making on the account. They're not going to do $10,000 worth of work for you. That's just common sense stuff. And I don't think anyone expects that, but just understand that they'll work with you as much as they can. And if they can't help you, like I said, move on. It's what you should do. There's all kinds of agencies out there that'll help. So that next slide, Nate. I'll just tell you that Nathan is, he's two things. One, fun fact about Nate's 7 generations from the state of Arizona. I know you don't care about that, but 7 generations from here, he's not going anywhere. His specialty is the childcare stuff. We help, and inside this group, we all pool our minds and our thoughts and our work together. That's where he works. I'm just helping him out today on this thing, and I will help him out on many of the things that come across the table, because that's what we do for each other. But if you have any questions, you can call him. And truth is, if you have any, we would like to open this up to some questions. But on the question side, if they're super specific, like really have to do with your agency in particular, he'll jump on a Zoom call with you and spend 15 minutes, you know, we don't mind that at all. He doesn't mind that. But anyway, I'll talk forever, so I'll just be quiet.
Thank you so much. We appreciate both of you gentlemen. If anyone has any questions, please place it in the chat and we'll gladly read them. Someone is requesting if you can go back to your info slide, please. Thank you. Does anyone have any questions? All right, Ryan Swan says, you said 3 companies that aren't writing new policies. So the question is, who are writing policies that you would work with today?
Perfect. So that's kind of a hard one. That is one of those things where that is part of the work that we do with our clients and with people we're working with. That is not something that I can just release out, sadly, because the work that we do every day is to provide creative solutions. And that is one of the things that we are doing currently, is providing creative solutions. Like Ben said, if you want to jump on a call, we can sit down and have a discussion and we can market to some of the current carriers that we are working with. Simply, I always say it's like giving the playbook to the other team. That's not something that I can just go out and release. And I know that's a hard thing for me to say, because I know that a lot of you guys are struggling to find carriers. But if you need any help whatsoever, we have markets for both organizations with claims and organizations without claims. That, you know, we have some standard market carriers that are still writing childcare. And then we have some excess and surplus lines organizations that we work with that are working with the harder to place things that have claims and things like that. I'm sorry, I don't have a more direct answer, but that's pretty much what I got.
And I'll give you a little thing. Here's what usually happens to us in the marketplace. Because we just explained how we put a submission together and all those items. I'll just tell you right now, most people don't do that. That isn't what you're going to find out there. So what we do is I take all this time, all this effort, and all this energy, and I put it all into this submission. And if you went out to four agencies and said, hey, get me a quote, they'd shoot you over an application. You'd fill out an application, you'd mark those boxes, and then they'd shoot it over to the carrier. And the carriers only give one quote, just one. So if I go to Nationwide and the other guy already sent over a one-page submission to them that you filled out, I'm blocked. I can't get there. I can't get a quote from Nationwide, who I've had a 15-year relationship with. They just say, hey, Ben, they've already got somebody. But then what they do is they take my work and they go, the underwriter does, and goes, well, I know what Ben's submission is going to look like. Let's see if we want to write this. And they go through the whole thing and all this work and all the energy I put into it. And they end up writing the account for some agent who didn't do the work and didn't put anything in. So that's why we come to where we're at. And on that question, anyway.
Thank you so much. Another question from Lynette. What are options for new centers that have not opened up yet?
So I would say we have a couple different options there. There are some dependents that go into that, as far as like, are you going to be contracted with DES? Are you not? Are you just starting up on your own? And so I will say, for new startups, that's probably some of the hardest insurance to write. And it's not simply just for childcare. If a construction company opens up tomorrow and they've never had insurance, they have to pay extremely elevated premiums as well, because a lot of what an insurance carrier bases your premium off of is your insurance history. So if you have good insurance history, your premium is going to be significantly lower than if you have a ton of claims and different things like that. So because they have no insurance history to base the premium off of, it can get more challenging and typically is a lot more expensive. So there is options out there. We have markets. There is markets out there that will write new startups. They just are more expensive premium wise.
Thank you. Another question that we have is, Has the change in California law made it that insurance companies aren't covering it in all states?
So that's a phenomenal question. The way that most insurance companies work, and this is not always the case, but when it comes to things like this, where they're already having issues in this type of business, when I discussed the state legislation and we went over that, Philadelphia and Great American both, in my inquiries to our reps over there at those carriers, and said, hey, why is it that you guys are backing out? They both reference that law because they both write insurance in the state of California. And so from their perspective, they look at their childcare book as one large book. They look at it as almost one thing. So whether it's in California or Arizona or other states, to them, it's their childcare book. And is it profitable? Is it not? So when that gets passed in California, and then it also gets passed in New York or Chicago or wherever this other legislation is being passed on the state level, they 90% of the time will take a look at it as a whole. There is some one-off cases where they will say, hey, we're writing this, or we're going to try this out in this state, but it's not offered in this state. That happens sometimes, but because they've already had issues with childcare, when that new legislation is passed, it's just the straw that broke the camel's back, basically. And they apply those negative connotations from that legislation. They apply it to all states that they write in most of the time.
Thank you. And thank you, Melissa, for that question. Next question from Elaine. The active shooter policy is available through.
So an active shooter policy is, I typically like to throw the word procedures in there. When Ben refers to that as a policy, it's not an insurance policy. Your active shooter policy is the policies and procedures that your organization is going to follow if something like that was to happen around or at your location. How would you handle it? What are the responses? What are those things? We can get those mixed up sometimes because policy is the same word, but it means two different things. So basically, if you reach out to your agent and say, hey, does the carrier that I'm with have any like sample plans or a form or something that they can help me to create this active shooter policies and procedures that I'm going to implement in my next safety meeting, and we're going to get everybody on board so that we all know what to do if there is an active shooter.
Thank you. We have a few more questions. April is asking, what is the typical average monthly amount childcare centers pay for insurance?
So that is, there really isn't one. It's very far across the board because a lot of the premium from commercial childcare centers and residential childcare centers is, some of it comes from like a larger scale, might have 6 or 7 buses or vans because they're doing school transportation. You know, parents come in, they got to go to work at 5 a.m. They drop their kids off at 6. When it's time for school, everybody hops on the vans, drops them off at school. Then they go pick them up at the end of the day. When a smaller startup childcare organization might not have any autos, or so it does go across the board. And again, if that's something, if you grab my email, you can shoot me an email and tell me what your situation's looking like, and I can give you a pretty good rough estimate of what you should be paying for your insurance, depending on claims and how long you've been operating and things of that nature.
Thank you. That was another few of the questions were in relation to the monthly costs and whatnot based upon their center capacity. I
Perfect.
do suggest that everyone take down the contact information on the slide. If you cannot see it, please reach out to Early Childhood Business Solutions and we'll be able to provide that. The next question I see for you gentlemen, as you indicated, interview your agent. Should we do this with our current agent? Asking because we continued and worked or took over the existing coverage when we purchased the center.
I would say that yes, if you want to figure out what your agent is doing for you, and like Ben said, we would obviously love for you guys to reach out to us, but sometimes Ben and I are not always the best fit for a specific organization. That's just how it works. That's how anything works. Some people like their plumber, some people want a new plumber, whoever fits your situation the best. And so I would seriously consider sitting down, depending on size of the organization. It sounds like you purchased one, so you probably own other locations and things of that nature. I would say you sit down with any other owners, your executive directors that run these locations for you and go, hey, what do we want this guy to do for us? What are our expectations? Write all that stuff down, come up with like 10, maybe 10, 15 questions that you can get through in 15 minutes and get on a Zoom call or a four-way phone call, whatever you want to do, and just ask those questions. It doesn't have to be anything crazy formal, but you want there to be a mutual understanding between, hey, this is what we expect from you. What do you expect from us? And like Ben said, the things that we went over today, if those things aren't happening, the question, Ben didn't ask the question, hey, if your guy's willing to do this going forward, then you should keep him. If he wasn't doing it before, then it's not the guy you want around. You want the person that's going to benefit you the most. And because my responsibility as an agent is to give you every opportunity to succeed and get your premiums the lowest that I possibly can and get you the coverage to cover you correctly for the amount of assets and different things that you may have and the liability exposures you have. So if you got to ask every time, you guys, the reason you have an insurance agent is because you don't really know what's out there about insurance. You might be well versed, but you don't know all the things that you can tap into, and your agent does. And that's their responsibility to tell you that. It's not your responsibility to ask. And so go ahead, Ben.
I'll just say too, we Nate and I talked about this earlier. Really what I am as an insurance agent is I'm in charge of strategy. That's what I'm in charge of. I look at where you're at and I discern that through the policies and procedures and what you're doing. And my job is to get out there and figure out how to get you to the very best place you can be on the insurance side. I am spending most of my time figuring out how to get from point A to point B. I'm sitting down and developing a plan that says, a 3-year plan that says, hey, this is where we are right now. We've got these claims. We're going to work on getting those claims off of the history for you and putting everything in place that makes you look presentable, more presentable to the carrier. That's what our job is. And then once we get to that point, once we reach that pinnacle, the other stuff is all going to be service stuff on the back end. And I have a full service staff that handles certificates and all the things that you guys need, and changes and upgrades and all that stuff. And then I have a whole claims department that handles all the claims, everything that goes on that way. You're not going to have to deal with that stuff. That is what your agency should be doing for you in some way, shape, or form. And obviously, guys, the bigger you get, the more involved your agent should be. And your agent is going to be as involved as he knows what he's going to be, as involved as the information he has about you and the time he spends. So I really think that interviewing that agent you'll be able to tell in 10 minutes if this guy actually knows what he's doing, or in this particular case, or if you've just been handed off to the next guy that's at the agency, this next guy, if this guy knows nothing, you'll know it.
Thank you so much. And thank you to Victor for your question. Priscilla is asking, what if you go through and get an online quote and another through private insurance company and they vary drastically in price?
I would say when it comes to childcare, that online quoters are great, especially when it's like a brand new startup. That can be a great option for you guys. They typically we call it the forms, the forms of the policy, but the policy forms are basically where they get into the weeds on what's actually covered and what's not. So you might have a policy, excuse that, there's a fire truck driving by outside, but on the policy, it could say, oh, here's your limits for sexual abuse and molestation liability coverage. But then you go down into the policy forms, and in the exclusion section, it says, oh, there's an exclusion for sexual abuse between members of the organization. So you might only have coverage for a teacher to student, but you might not have student to student coverage. So there's things like that you have to be very, very aware of, which is why in that case, it's better because a commercial agent can, even though essentially, what I'm saying, short and sweet, is you get what you pay for. When you get a quote, when you go on a quoter, that might be what you need at the time, but you're not going to have the service and a specialist looking at your policy forms, making sure that when a claim happens, and it's not if, it's when a claim happens, you are covered correctly and you're taken care of.
Thank you. And the very last question I see for you gentlemen is from April. We have been in business for 3 years and about to renew our policy in June. Is it advisable to shop around for insurance or to keep what we have and possible have increased rates? It seems like it's a hard time to access insurance for childcare.
Yes, I would say that it never hurts to shop around. And again, the term shop around, April, we always, that's the classic term used, but it might be something where you interview your agent, and when you interview your agent coming up in June for this renewal, when you interview them over the next week or so, and you set that Zoom up, one of your questions might be, hey, have you shopped this? Have you looked anywhere? Where have you looked? What's going on? Because another thing that you have to take into account is the people who are heavily involved in childcare and writing childcare from the insurance agent standpoint. Some agencies have access to markets that other agencies don't. And some agencies have a better relationship with another agency. And so you might want to find out and go, if you do end up, like we said, you want to use one broker and let them leverage the marketplace instead of leveraging 8 brokers so you don't have everybody blocked everywhere. In your interview questions, write down, hey, what carriers do you have a good relationship with? Or is there any carriers that you feel like you can access and use your relationship to get a better quote than other insurance agencies? And you might give, one agency access to 3 quotes, write them down on a piece of paper and say, hey, you're the only one going to these 3 carriers. And then you go to the other one and go, hey, you're only going to these 3. The other guy has access to these 3. And so there's many different ways you can go about it. I would say there's nothing ever wrong with looking at your options, because as long as that carrier is offering a renewal, don't wait till the last minute to bind it. But as long as they're willing to offer a renewal, that renewal is going to be there. So you're never going to do anything to get rid of that renewal if they've already offered it. So you can always shop your insurance and see if there's other agents that have access to programs or things of that nature.
Thank you so much. There are a few more questions in the chat. After this, if you have any other questions, please reach out to us at Early Child Business Solutions, and we can bring the questions to the Mahoney Group, as well as please take down the contact information on the slide in front of you. I will say the last 3 that I see for now, and like I said, please reach out for questions. Does the Mahoney Group offer Spanish-speaking staff, and do they also serve family childcare?
Say the last part again. You cut out a little bit, Nora.
Oh yeah, no worries. Does the Mahoney Group offer a Spanish-speaking staff? And does the Mahoney Group also support family childcare providers?
Yes, so we do support family childcare providers. Basically, anybody who has an FEIN and an LLC name or a business license, we can get insurance for. And we do have members on staff that speak Spanish. They may not be specialized, but I can always use them as a translator and we can get that figured out.
Thank you. And the very last one I would like to just read off. Kenneth is actually giving you an endorsement, Nate. We just renewed all 3 of our locations with him. He is exceptional.
Yeah, Kenny's awesome. It was great working with Kenny Wentworth. He was phenomenal to work with and definitely on top of his stuff. And I appreciate that, Kenny. Thank you so much.
Perfect. Thank you so much. If anyone has any other questions, please reach out, gentlemen. We thank you so much for your time today. You have really supported our providers here in Arizona. We
Awesome.
appreciate
Thank you so
you both.
much, Nora, for the opportunity. We appreciate